Welcome back. This is my personal top 5 predictions for the Canadian real estate market in 2025. Stick around because number 4 is downright scary. Everyone's asking about it, and we're going to dive right into it. Prediction number 1, Canada's real estate market is going to begin to rebound, and Canadian Real Estate Association agrees. They're expecting a 4.7% increase in the national home sale prices across Canada. That's a good thing. But I mean, Canada's a big country. It's very regional, excuse me. And the important part to remember is that in the biggest markets in Vancouver, British Columbia, Toronto, Ontario, we're going to see the biggest rebound, not in price, but in sales. Sales have been down for so long. So we're going to see sales, the number of sales, return while prices go up slowly. While in the maritime provinces, we're going to see prices come back and even further increase more than their records in 2024. And CREA spells that out right here. Manitoba, Quebec fall within these extremes. There's demand expected to play out more on the price side in Alberta and Saskatchewan, while British Columbia and Ontario expected to see bigger rebounds on the sales side owing to low sales in the last few years. So we're going to see confidence return to BC and Ontario and sales begin to increase, which is necessary before we see bigger price increases. Prediction number 2 is that while the average sale price, the average home value is going to increase, there's going to be wide gaps between asset classes. And the best asset classes are going to be single family type homes, duplexes, triplexes, and the worst performers of 2025 are going to be condos. And let's take a look at this Bloomberg article. Investor interest is likely to return to Canada in 2025, according to experts who say more capital will be allocated to the industry amid falling borrowing costs. We've been talking about this for months. Okay, we're still in a period of sluggish investment activity. We're not going to see a surge of activity in Q1 and Q2, but I can tell you consensus certainly seems to be that this is the start of a new cycle. This is what we've been waiting for. This is when you get in as a buyer. We've come out of the worst of it, and now we're heading back up. Slowly, of course, it's real estate. Nothing's going to happen overnight, but this is the time to get in. Okay, we're already seeing an increase in investment interest and activity for retail properties and necessity-based retail centers. Okay, it's coming back. More individual landlords. He sees more investors returning as a market, acting as landlords with increased residential activity, lower borrowing costs. Everything's pointing in our direction. Finally, the pendulum is swinging back toward the individual investors. Now, I'll fast forward here to residential sales. According to their analysis, volumes in our biggest cities are back to like 2008 levels. So that's like the low of the low, and now it's going to increase. That's a big, big deal. Okay, we need sales to increase before prices ever increase. Predictions, they have a different trend. They expect properties to rise a little bit faster in terms of single family homes, but they're predicting prices in condos only go up by 1%, only up by 1%. So while single family homes do a hell of a lot better, I'll let you read the article. Prediction number 3, also good news. First-time home buyers are finally going to get a break. While they've been scared off over the past 3 years with high rates, low inventory, and a weaker market, things are starting to turn in the buyer's favor, and first-time home buyers are sitting there with pent-up demand wanting to enter the market. Rates are lower, things are getting cheaper and easier, and they're going to enter the market again. Okay, and one of the things that's going to help, besides lower interest rates, is more inventory. A lot of condo inventory is going to come on the market in 2025 and 2026, meaning they'll have much more choice. Developers will have to incentivize sales to get them done, and that works all in the favor of first-time home buyers. We're getting more people into the market, more confidence, more people talking at the water cooler about how they're buying their first property. It's all positive to get this market restarted. Number 4, this is what you should be paying attention to. This is what I am and some of the bigger players are paying attention to. The looming threat of a 25% Canadian tariff from US President Donald Trump may impact the Canadian economy. Obviously, that's going to be inflationary to our economy because it makes everything more expensive here. Now, if Trump enacts a blanket tariff, it could negatively affect the growth of the Canadian economy. that means the BOC might create a cushion for the economy by accelerating rate cuts. Guys, outside of all these economic problems, what happens if they cut rates? What happens to asset prices? You take a guess. I'm not going to tell you. That said, TD Economic predicts the BOC will cut its lending rate in total by another 100 basis points by the end of the year. That means by the end of 25, BOC's lending rate could sit around 2%. Right now, it's at 3% just after the January 29th most recent quarter point rate cut. So that's a further percent from where we are right now. The Bank of Canada will continue monitoring the uncertain economic conditions. I am hopeful this tariff thing resolves itself. Is it scary? Yeah, it should be. It's supposed to be. That's why Mr. Trump is negotiating the way he is. Like him or hate him, he knows what he's doing. And we're not going to win a tariff or an economic war with the US. So we're going to have to bend somewhere, somehow. And as good Canadians, we will do what's right, hopefully, for the middle class and take care of the people here. But watch this story like a hawk. And finally, our GDP numbers aren't going to look great on paper, but it may feel better for those of us who are longtime Canadian citizens. I'll tell you why. Obviously, the immigration story has changed. With Trump now in office, immigration shut down, meaning we can't just open a border and let whoever we want into the country anymore. There's going to be much more scrutiny, which means actual less population growth or a healthy level of population growth, which is in the long term a good thing. Okay. But in the short term, that's going to affect GDP because we've been relying on that GDP, or excuse me, we've been relying on that huge population growth to fuel our GDP. What people don't realize is that while our GDP on paper has been growing, it's been due mostly to immigration growth. And we've been splitting a smaller piece of the pie because there's so many people coming in. Meaning, if our GDP is here and we have this much population, we all get an equal share. But if you increase the population dramatically, everyone gets a smaller share of the pie, even though GDP is going up. So with this slowing down, with population growth slowing down, we're going to get back a bigger slice of what we already have. And that's good for individual Canadians and the middle class. But on paper, it's going to scream ugly. And they may lower rates in order to fuel lending and prop up GDP. In the end, for real estate investors, that's a good thing. Folks, that's it for today. I want you to download my 2025 playbook. It's in the comments. I've dissected, the economy, what you should do as an investor, as a buyer. It's a fantastic tool and guide. Get it while it's free. Pay attention to this channel. We're going to make sure you make sound investments. Subscribe, save, and share.